Hey guys, I hope you're having an awesome Sunday. So much is going on in reaction to earnings season. And this is one on Credit Suisse that, I mean, they reported about 2 weeks ago, but I've got a lot of videos out on Credit Suisse. So I wanted to have this follow up one on what happened on the quarter to the extent that some people are focused on it. So we'll just go through this very quickly as an update. Past performance not indicative of future returns. I actually do have some really small, I would almost call them bets on Credit Suisse, farther out in they're just very, very cheap calls that I have. And like, I think either December or January of next year. And I really do think that if you're going to do this one, the stock's at like $3. Hey, Adukin. The stock's at like $3. And so you really are taking a very binary bet. And with Credit Suisse, either it's going to survive or it's not. And then it's what will it survive as? The market cap lingers well below things like Robinhood, et cetera, which I always find so fascinating when you do that sort of comparison. But in particular, I personally don't think that the Swiss banking system will let it go out of business. So that's why I kind of have these sort of Hail Mary calls that are at least a year out. They will, however, have to reorg aggressively. And so from now until the end of the year, if you're following this story, it's really about how far have they gotten with the reorganization. And that's above and beyond any earnings that's coming out, any revenue that they make. Is it important? It's always important, but really it's going to be about whether or not the company is able to downsize and unwind enough to where it can be rolled into other companies. And so I'll go through the financials really briefly, but I want to talk about some of the strategy that was discussed on the call that's actually rather interesting. And you'll have to make a call essentially on whether you agree that that's going to do it or that's not going to do it. So I will say that it was very interesting on this call because I couldn't get into it. And I almost wonder if it's because everybody that's still an employee of Credit Suisse is just very concerned as to where they stand as an employee, because, this has been scandal after scandal after scandal. Then Ulrich Kunz is in there now, the new CEO, trying to just do what is equivalently an unwind. Here's what revenues were down 33%. That apparently missed the lowered street guidance. And then net income came in with an even bigger loss than was expected. It's kind of like, it's not great, but it's not the story. So the fact that people focused on that is a thing, but you can kind of see that it's all it did was take the stock down from, it's still a big change from 350 down to $3, but whether or not this thing survives is the point, not the, quarter to quarter strange thing that is going on there. Okay. I love that Hadouken is posting this. I'm actually going to take a pause because I do want you guys to keep this in context. The Swiss banking system is it's a special place within the banking system in general. And maybe I'll stop share while I say this before we go through the rest of the financials. It's a really special place because not only is it known for a particular type of secrecy, which absolutely is true, I would also say that the other big component of Switzerland itself as a part of the banking system has to do with how you can manage taxes and investments that are not in an individual country. So for example, it's really Switzerland, Luxembourg, and Ireland. And so it's not like, oh, who cares about Credit Suisse? No, you have to care about you have to care about the Swiss banking system in general because of how it sits as a piece of the greater activities of financing in Europe, period. Because of individual country taxation, the way that it's done, whether it be for a pension fund or otherwise, the way that nations get access to financing is through these types of I almost want to call them special places: Luxembourg, Ireland, Switzerland. And so it's actually not okay for a single bank that is of this size to go under which is why I watch it and I find it to be truly one of the most fascinating stories within finance right now. And even though I am a bit late on posting this, I do want to have a little something here in case you're following through or you're looking at this company much later trying to see what happened per quarter. Okay, so back to our story. The CET capital ratios, what CET capital ratios are, and I have a feeling I'm going to get some help here from Dukin, but essentially that is a capital ratio that is calculated for banks to make sure that you actually have the right risk-weighted cash to given the risk that you're taking to try to make money, because you give the bank deposits or whatnot, and then they have to lend them out and try to make money in any number of ways or apply them to various investments. So the CET capital ratios at 14% comes in as high as like a Morgan Stanley, Goldman Sachs. In contrast, a regional bank in the US on the low end might have 8%, something like a Wells Fargo might have a 10%, but it's really an attempt. You can't have that be too low is really what it comes down to. And so they continue to bank more capital. And the way that they're doing it is actually kind of interesting. And it's really the only call. I'll get to this in just a second, but I do want to show you the breakout. At this point, they kind of break the business in two parts, and that is wealth management business, the Swiss bank, which is a little more classic banking, and then asset management. I would almost, if you're just trying to understand this business in general, I would put the wealth management and asset management business in the same buckets, because it's really about people going to them looking for investment advice or related type stuff. The Swiss bank is actually a classic bank, although in fairness, the Swiss bank also has some asset management pieces to it as well. The investment banking business for them is all of trading plus corporate advisory. A lot of investment banks will actually split that out. For example, Morgan Stanley, they have a securities capital markets side and investment banking side, but for Credit Suisse, it's all together. And then corporate center is just kind of the treasury function that kind of manages capital between all the different business units. So don't worry about that too much. It's always a really small thing. But what I really want to show you, and that I always like how direct this management team has been about what's going on, for better or for worse, the investment banking division, which is also their capital markets division, continues to lose quite a lot of money, and it will continue to do so. But let's talk about why that is and what's actually going on in a second, because what's happening there is actually a part of the unwind. And so because of this particular moment in history where they're unwinding, they're just not catching a break. Now, on assets under management, which is going to be the wealth management business, the Swiss bank, and the asset management business, those three pieces, you can kind of see the Swiss bank, which is more, it's got like a mixture of deposits and it does have some, wealth management in it. That's more or less stabilized. The just regular asset management business. And they did some sales, which you can see all funds with their fund management business is gone now. So that's mostly stabilized. Wealth management, which is truly that extreme high private net worth, think James Bond kind of thing, that business has really struggled and was struggling even last quarter. Most of those losses, they told us on the call, came like 60% came from the immediate October when they were locked up from having conversations. And then they went on a spree trying to renegotiate or try to, beg the customers to hold assets at Credit Suisse. They're saying that it's slowed down. In some cases, what they got was a percentage of the assets that used to be held with we just want to see how it goes, but it's got to be a smaller amount of assets because I can't have it at your bank. So we'll see, and we'll be looking for in future quarters how much is coming out of that wealth management piece. And again, like some of you guys may think of wealth at a very particular number. I would just add a 0 to the end of that number, because this is truly ultra high net worth that we're talking about. Like Swiss Swiss asset management is not the same as US asset management, even though we have really wealthy people here. Because of the nature of what that is, it looks a little bit different. So just add a 0 to whatever number you think is their high net worth bank business that they're actually trying to maintain and keep at the bank. Okay, so now let's talk about the investment banking piece that is continuing to lose money. The first thing I kind of want to talk about is I'm going to show you this, and then it'll start to make sense of how the CET capital ratio, the investment banking business all come together. And these graphs that they had are actually quite wonderful. I do think you have to have a little bit of a risk background, or else I could see that being a little bit painful. So what they're trying to show here, first, just looking at the colors, the green, everything that's green is the portion of their business that is structured in US dollars. The blue is Swiss francs, and then the aqua, or I don't know what you want to call that color, but the color that is like aquamarine, I don't know what you call it. And then the blue is actually euro. So mostly their business is in Swiss francs and US dollar. And one of the little baby tiny footnotes on there was that a 10% strengthening of the US dollar would have a negative 1.5 basis point impact on CET capital ratios, which it's, they need the dollar to just kind of chill out right here is really what they need. So that was not the greatest, because you can kind of look at the CET capital ratio, and at 12%, that's still considered fairly high. That it wouldn't be the highest, especially right this minute in history, with Goldman Sachs and Morgan Stanley both reserving about 14% on CET. But it's not like a Wells, who's always up against the road at 10% CET capital ratio. In fairness, though, Wells doesn't have the currency risk and a bunch of other stuff. So, this is not the time to pick on Wells. I definitely do my fair share of picking on Wells in other episodes. But 12%, I would like to see them maintain it at about 14, so we can watch the unwind and not have any other discomfort, because there are a couple of things that are happening this quarter that are a little funky within credit quality, et cetera. And we kind of really have been banking on global credit quality maintaining at a certain level. So bottom line, let's hope that, like, for Credit Suisse, part of the story is actually an FX piece of the story. So that, if you're a hardcore Credit Suisse person, you're going to have to watch that. And if we see big currency swings, particularly between the US dollar and the euro, even though it's a really small piece, but because the eurozone and Credit Suisse and the Swiss franc in general is affected by that, if you start to see big swings in currency relative to the US dollar, we're going to have to revisit how Credit Suisse's wind down is going along. So that's the first thing. The second thing is, what are these actual CET, like what actually comprises the CET capital ratio? That's risk-weighted assets, and risk-weighted assets really means the investments that the bank is doing. And so I want to show you Apollo Group bought the securitized product business and non-core unit. And you can note that it helped lower the required CET capital ratio. So it lowers what's required and therefore increases the CET number. And Apollo Group is doing this in parts. Now, this is both a positive and a negative, because securitized products, despite all the bad rap that they get, they're oftentimes done in a way, hey, Kim, they're oftentimes done in a way that is very profitable. So, sadly, I want to say like 3 quarters ago, they were really trying not to get rid of the securitized piece, or at least to continue to maintain parts of that business. But last quarter, we started to see something a little bit different, where you started to be like, okay, they're probably going to have to let it go. And then you've got Apollo Group coming in and buying it probably on the cheap, if we're honest. That's why now, just putting all these numbers together, here you can see that it's benefiting their risk-weighted assets. But again, it does imply, and they did say this on the call, it does imply that that's part of the reason why this L was not what people expected, for lack of a better way to describe it. That L probably was, lost. Apollo Group probably has the other side of that L. That's what I'm saying. I don't know for sure. And if you're from Apollo Group, feel free to put it in the comments if you want. I'll go ahead and eat crow if I'm totally wrong. But it does sound like, when I listen to it, that's what they did. I don't, like I said, this is a very binary stock, and it's really interesting because he's in a tough spot. He's got to unwind the bank. And what he's got to do is get this whole business small enough where it can be spun out by itself and survive because the market is just letting it survive. Or it can be spun out and someone else wants that business to buy it in its entirety. And what do I mean by the markets let it survive? if we start to get a pickup in private equity, if we start to get a pickup in deal flow, they'll just get lucky because they'll given the timing of all of this and given where people think the pin will drop, such that the capital markets will awaken once again. He might just get lucky and all this stuff happens at approximately the same time and allows the investment bank piece of this to be quite interesting. But nonetheless, between then and now, he's got to make sure that the bank doesn't have a secondary issue as relates to capital. That's how I'm looking at this Apollo Group sale. This is, by the way, definitely a place where if you have differing feelings, fair enough, because this is not very straightforward at all. But it would be like I've talked to some people who, we respect each other's opinions because this is really not the greatest situation. This was the second big thing that was announced that I think people have danced around, probably because maybe you've got a reporter that isn't necessarily a certain background. But this purchase of M. Klein and Company, I encourage you, if you're looking at this one way or the other, to look up the resumes of everybody. Because when you buy a company like this and you're doing it in this setting, essentially what he's doing is he knows that the existing management team is probably not the management team that, if he spins it out, would be the correct management team. Or alternatively, if somebody wanted to buy that asset, they would be buying the people and the relationships, which means you kind of need, no shade if you're a banker at Credit Suisse, but you need a different sort of headcount and a different sort of person. This is very common for you to buy the people that you need in order to do this sort of thing. In fact, at different times, many asset managers have bought full on an entire hedge fund or whatever just to bring it in-house and have the talent in-house, the analytical power in-house. So that's what this is, in case that is confusing for anyone. And then it just comes down to whether or not this purchase was good. And this is always hard. Now, Mr. Klein looks like a really smart cat, and he looks like the folks at M. Klein and Company. These are really impressive deals. Nonetheless, it still comes down to whether or not they paid the right amount to bring it in, and what it then looks like as you start to break up the last parts of Credit Suisse. So if you are looking at this, even if you're looking at it as a Hail Mary, you're just going to buy it like calls out in 2023 or 2024, which would be closer to your timing, it would be good to use any spare time to try to understand this piece of it. Because really, if we look at it, he's got to get rid of this investment banking pieces so he can stave off these losses. And is there anything else I have prepared? No, that's really it. So it's stave off these losses from the investment bank. But again, I really want to, to the extent that it's not being spun this way in the press, those losses, a lot of them really have to do with going ahead and taking the L so that they can move the business forward. Other banks probably have, on a given day, if they had to sell certain pieces of securitization in the size that Credit Suisse has to do, that's very important, then they might also have to take an L, but it's not, it's probably like Apollo probably did a really good job purchasing these assets. I'm going to say it like that. And with that, I don't really see a lot of questions, but Hadouken, I super appreciate that everything that you're posting, I think, shows up on the YouTube side of the chat. If you have questions, definitely go ahead and post them now. I wanted to keep this a little bit quick because there's just so much going on. All right. I don't see any questions, but if you do have questions, definitely put them down in the comments below. I will answer them when I can, because we are coming out of earnings season, and I'll start to be focusing on non-S&P names, because I've got about maybe I think 80 more companies to listen to get to my 80% of the S&P 500 that I do each quarter. And I would love it if you would subscribe to my channel. I know I have a lot of people that listen to AMC, so I will be covering the earnings call and taking care of a couple of other things that people have been putting in my comments as relates to the lawsuit that's pending. And also, I sometimes put stuff in Twitter. So if you're specific to AMC, but also anything, because if I just have a thought, it's a little bit faster to stick it in Twitter and then do a video later. So please do follow me on Twitter. And with that, everybody have an awesome Sunday night. I hope you guys